Bryan McNee, Senior Bond Analyst for MBS Authority, reporting for MPA TV. Today is Monday, August 5th. Let's take a look at what happened in the world of mortgage-backed securities last week. Let's take a look at this candlestick chart for the whole week. Mortgage-backed securities, if you look at from the open to the close, moved sideways, only trading 8 basis points higher for the entire week. That's a very small movement and caused mortgage rates to move sideways. But it was a volatile week with 3 days of 100 basis points movements up or down. Started Wednesday with the ADP private payroll data, much stronger than expected. That's good news for the economy, bad news for mortgage rates. Then followed up with that is you had second quarter GDP was stronger than expected. Again, good news for the economy, bad news for mortgage rates. Mortgage-backed securities were selling off about 95 basis points until 2 o'clock Eastern Daylight Time when the FOMC, Federal Open Market Committee, came out with their interest rate decision and monetary policy statement. Essentially, it was about the same statement as what they made the last two meetings, and on the last two meetings, mortgage-backed securities sold off in a big way. The difference here is that for some reason, the market was hoping or expecting for the Fed to give a more firm timeline on their tapering where they would start pulling back on their $85 billion worth of 10-year treasuries and mortgage-backed securities. They did not give any guidance, just like they didn't give any guidance the last two times. But this time it disappointed, and mortgage-backed securities rallied as a result. And you saw us make back up the losses from early morning on the ADP and GDP data. Thursday, initial jobless claims lower than expected. That's positive for the economy, negative for mortgage-backed securities. And then also you had the ISM manufacturing index was stronger than expected, and that caused mortgage-backed securities to sell off as well. That got us to just about the highest rates of the week. Friday, though, different story. Non-farm payrolls came in 8:30 Eastern Daylight Time. Came in at 162,000. The market was expecting somewhere around 184,000, and in fact, the whisper numbers were closer to 200,000. So this weaker than expected economic news caused mortgage-backed securities to rally, and you saw us make back the losses from Thursday. But all in all, you'll see this line going all the way across. I've highlighted it here. For the last 8 trading sessions, and actually going into today, today's trading session follows that pattern as well. We have a very well-defined trading channel, and bond traders are unwilling to write a check for a mortgage-backed security over and above that level. And this, of course, is for our benchmark, which is the Fannie Mae 3.5% August coupon. So anytime we get near that level, mortgage-backed securities are capped, and it's difficult to have any real price improvement as a result. Now, let's take a look at what's on the agenda this week. I'm going to go ahead and throw up the calendar here, and you can see that really Monday we start off with ISM non-manufacturing, which is, of course, ISM servicing. That number was much better than expected. Of course, it counts for 2/3 of the economy, and as a result, mortgage-backed security were under pressure today. Now, what's on the agenda for the rest of the week? Well, we have a couple things to contend with. Primarily, we've got some treasury auctions. We've got a 3-year, which really doesn't impact mortgage-backed securities, but we have a 10-year and a 30-year this week as well. The 10-year is going to be key to watch, and specifically, we'll be watching that bid-to-cover ratio to see if the demand is as strong as the last auction. If it's stronger, then you're going to see an improvement in rates. If it's weaker, then you're going to see mortgage-backed securities sell off, and you're going to have higher rates. So really, Wednesday is very important. Also, we have a couple talking heads out there. The Federal Reserve presidents of various districts are going to be out there speaking. They do it every week in one capacity or another. And so the market will be looking for any type of hint from them as to what they favor individually as far as timeline for tapering. And so that's really what, again, we've been saying this on MPA TV for several reports in a row. It's all about the taper. As soon as the market believes that the taper is getting ready to start, mortgage-backed securities will sell off and your interest rates will pick up. Once they actually do it, why, then of course mortgage rates will go up, because one of the biggest and largest purchasers of mortgage-backed securities will be pulling back. And that goes back to Econ 101, supply versus demand. If all of a sudden the demand starts to curb and the supply is the same, why, then you got the lower prices. And when you lower prices, mortgage rates go up. So that's what our big concern is this week, is just monitoring how those treasury auctions go, what comes out of the various Fed presidents talking mouths on the days that they are speaking. And we'll also take a look at the economic data. Wholesale inventories on Friday will be key to watch. Initial jobless claims on Thursdays is always key to watch. And so we don't have the type of week we had last week where you're going to see monumental swings up or down. Right now we're trading, even though we're under pressure due to a stronger than expected ISM non-manufacturing report today, we're still treading water close to that ceiling of resistance that we've been discussing. So I have to keep an eye on that. As we go more and more and longer, unable to break above it, then the likelihood of breaking below it becomes stronger and stronger. And so that's what we're concerned about. Effectively, when we look at the economic data, you're going to need some big-time surprises to the downside in order for us to break out of that trading channel and give you any type of price improvement. You need a horrible wholesale inventories. You're going to need initial jobless claims in reverse course and start picking up instead of decreasing. And you're going to need a very, very strong 10-year Treasury auction on Wednesday. Those are things that you need in order for you to develop a perfect storm to buck the trend of higher rates and temporarily give you a reprieve into some price improvement. We'll just have to keep our eyes open all week long on this. Make sure that you're logged into one of those sites like MBS Authority or Rate Alert where you can see live pricing trends and details and stay ahead of any reprices from your secondary locking desk. Have a fantastic week. Take care.